Hi, welcome to the Froggy Five. I'm your host, Jim Freilich, founder and managing member of Froggy Companies. And today I'm super excited to be interviewing Andrew Campbell from Wildhorn Capital. I got to do this right away. I say hook 'em horns because he's a UT guy. If I don't do that, somebody from Texas will try to beat me up like I think a guy almost did last year in a bar. I was watching an Iowa State game and a real bad call happened. But every time I said, "Oh no, that's BS," these huge jacked up guys from Texas turn around, and I spent enough time in Texas to say, "I'm not going to pick a fight over like messing with your horns." So I get that out of the way early.
People get a
Andrew.
little sensitive if you turn them upside down. Some people don't like that.
Yeah, we won't do that.
Yeah.
So we'll keep him up for this podcast. He's a UT graduate. More importantly, he's a managing partner of Wildhorn Capital. Native Austinite. He's got a background in market research and branding, spent a decade doing that, very successful. Passive investor on his own back in 2008, transitioned in 2010 to start being an active investor. They've built up a huge portfolio since then. I mean, it's 850 million assets under management. They've done, let me look here, 21 assets, 4,200 multifamily. So they know Texas. They specialize. They do multifamily, build to rent. I'll let Andrew talk more about that. But Andrew, welcome today. Happy to have you.
Thanks so much for having me. I look forward to talking with you.
Tell me how it all started. Give me some more how besides what I've just said about
I think it started just by starting, honestly, and didn't set out with a goal, didn't have a background in real estate or a family in real estate. It was always something I was interested in. Started kind of passively investing, as you said, and you realize, hey, this seems pretty interesting, and I understand it. I've always joked, I don't think real estate is. You don't have to be the smartest knife in the kitchen. It's a hard asset. You can underwrite it. You can see kind of what the rents would be, and so I felt comfortable kind of getting into it and doing something a little bit more active, and started with small projects and properties and my own capital, and just grew it to the point that it became sort of an obsession, and really enjoyed the deal making part of it, and decided to go start raising outside capital. And that was kind of 2015, which really was the genesis of Wildhorn. Kind of what started that was like, hey, if we're going to raise money, need a platform to do that. And kind of ended up selling all the stuff that I had to put all those funds into to co-invest in our projects. And, today we're, you said, a little over 4,000 units. We're kind of exclusively focused on Central Texas. You mentioned I'm born and raised here. Kind of feel like we're an operator at the end of the day, an operator of multifamily projects. And that requires a lot of energy, a lot of focus. You're leasing units every day. It's not something we've ever gotten comfortable with being able to do remotely, or in a different market. And some of that is a little bit helpful that, we joke we're the kid that was, born on third base and said they hit a triple, like it just sort of the right vintage in geography. I was born in 1980. I'm about to turn 44. Austin's seen explosive growth. Central Texas has been explosive growth really that my entire life. And we've got great relationships and most importantly, a lot of conviction about what part of town you want to be in, where the puck's going, where the growth is heading. And that's something that I just never felt like we could do in another market. Never going to know it as well as we know here. And so kind of hung our shingle on being, a Central Texas expert and an operator in kind of the housing space. And we've got a variety of business plans and strategies, but it's all based on, people tracking job growth, population growth, and the belief that people need a roof over their head. And so, let's offer them a good place to do that and find business plans and assets that we think are winning business plans.
Absolutely. Well, thanks for sharing that. So yeah, absolutely. You're blessed to be in that area, to know that area, to grow up in that area, to be blessed from a real estate perspective, for sure, among other things. It's like, this might be an older reference. I'm not sure what happens on Austin City Limits now, but it would be like a musician that gets their first gig on Austin City Limits, maybe. That's how blessed you really don't need to go far away from home because you have so many amazing submarkets around there. And you're, like you said, understanding those submarkets better than other people trying to come from other states. Like me being in New Hampshire, trying to go do an Austin deal. It'd be foolish to try to compete head to head with a guy like you. It'd make more sense to team up with somebody that knows stuff on the ground. But I want to ask you this. This is a little bit secondary part of this question, try to motivate people. Was there anything specific, you can answer either of these or both, anything specific you've had to persevere through that you're proud of relative to this business? Or is there anything specific that motivates you, either like the work because you love it or what it provides you and your family, or are you trying to do some bigger social justice or good for the world?
Yeah. Maybe I'll take you back to kind of the beginning of my real estate journey to help answer that. So I kind of 2007, 2008, I started investing in deals. What drove that was I was not I'd left home. I was living out of state. I moved back home because my dad got real sick and had a big brain injury. And I came home to basically take care of him. And I was like 26 or 27 at the time. And in that process, moved home. I quit my job. And so I was sitting here helping him, helping my mom. I was like, I don't know what the heck I'm going to do. At some point, I'm going to have to get a job and kind of figure out going forward. But that event kind of certainly changed the trajectory of my life. But I also was like, hey, I need to find something that can create some passive income, because I don't know what his future is going to look like, or how much time I'm going to need or want to take care of him, and et cetera, et cetera. And so that was like probably the linchpin, pivotal moment, and changed the direction of my life. I don't probably get into real estate. I was always interested in it before that, but I hadn't taken action. But that, certainly big life changing event prompted, okay, I need to go actually figure something out. And so had time. I was in the hospital a lot, reading books, talking to people, and kind of led me to go buy our first duplex, which was the first project I bought. But it was based on an idea of hey, I don't really have any choice but to start taking some action, and I need to create passive income. And then since then, it's just been, it's become an obsession and a passion. And I think I've realized I love the deal making aspect of it. I love that it's not complicated, as hard and sophisticated as people want to make it sound. And, the zeros get a lot bigger, and you say, oh my gosh, it's, how many thousands of units and the values of the properties, but it's still, will somebody come and rent this unit or this building for that price point? And is there cash flow? And do you have the right leverage point? It's not much more complicated than that, which I think has given me the confidence to continue to go look and attack deals, bigger and bigger deals, and say, hey, keep simple, keep the basics, and treat people right. Both your investors, your residents, that it's a business you can scale, and it continues to be a lot of fun. So that's Absolutely. Just kind of how it's been how we've grown and what the trajectory has been.
All right, great. Well, thanks, Andrew, for sharing that personal, that very personal event. And it's a great example of how someone's life can turn on a very specific event, and you find yourself in an area that maybe you wouldn't have otherwise gone to. And I understand what you're saying about the being addicted to deal making. I'm definitely addicted to deal making. I've underwritten a couple thousand deals in the last few years. I find myself just analyzing deals sometimes. I'll be 2 hours into something, oh, I'm supposed to be doing this, but I just got myself caught up in this deal because they're constantly coming in your box, and I get that aspect of it. So it is kind of addictive. And then in terms of the complexity of it, I agree. I'm amazed. I had a 25-year career. I was an Air Force officer. I had a systems engineering background. I did a lot of difficult work in my life, and I earned a good living over years. And my life goal, because I started poor, was to make 100,000 someday. When I was 15 in 1985, I couldn't imagine anything beyond that. A guy makes $100,000, probably living on a yacht. He's in a mansion. This is my world view at that time, right? I didn't realize. And I hit that goal at age 29 as a consultant. And I was like, oh, then I discovered taxes, right? And I was like, okay, now it's the next level. And I just, so I was always comfortable, middle-class family, raised two sons, and then got into the real estate world. And I made a lateral move. It was interesting because that was my challenge. Was how do I make a lateral move without just giving up everything and creating this time? I'm not in my 20s. I'm not going to start building. And so when someone gave me the opportunity to make that lateral move, and I was sitting in my office, I was just this is crazy. I'm looking at deals all day. This is like the easiest job I've had since I managed a Papa John's back in college or something. It's like, this is crazy because that was my perspective, right? So now I'm like a kid in a candy store. I know it's not like that easy, right? I've since discovered that's not like the first times you hit on a blackjack table and you think it's all going to be winning. I've discovered, the darker side of this as well, but it's an amazing business. So I see that you have a passion for what you do. I want to shift gears and ask you, with all this amazing portfolio you guys have put together and all the deals you go through, it's my question's about technology. Do you guys use anything special on the technology front? Are you shifting to any crazy technology, or do you see some kind of technology besides ChatGPT? You can mention it. Besides that, like something changing, the future of real estate.
Yeah, I mean, look, I think there's so many ways you can answer that question and think about it. And in our business, again, I'd say we're an operator. So we could talk about the way that technology is impacting the operations and just the asset and the user experience as a resident. We could talk through the acquisitions and sort of the way people are tracking deals and you're leasing them and things. But I think I'll start and I'll say, I think one of the things that I have a lot of comfort in when you think about technology and, Chat GPT and AI, and that's kind of everybody's question right now, like what does that disrupt in the future? And, are you going to need a lawyer in the future? And how does that business model, like, to me, that seems to be an industry that could be at a bit of a crossroads. Maybe it needs to be a bit of like, hey, I'd love to pay you for your strategic advice and thinking on a legal matter as a lawyer. Do I want to pay you for your, $800 an hour to write this simple contract if that can be done by an AI? Residential real estate it feels insulated from that some. And again, back to, beginning, I said, everybody needs a roof over their head. Conversations about future of work and are you working from home and what's the future of office look like? And there was all this consternation about retail a few years ago, and Amazon's taking all the retail. Well, retail's bounced back pretty well, but like housing, the model might shift slightly. That it's floor plate preferences and amenities shift, and does somebody want 2,200 square feet instead of 1,500, or do you have a centralized kitchen and kind of a communal building? And there's some different unique concepts out there, but at the end of the day, you still need a private shared place for you and your family to reside. And that fundamental shift isn't going to change, I don't think. So I think from a technology standpoint, I don't lose sleep about, our business is going to go away based on technology. And then you look at like the impacts it could have and certainly smart home features and kind of the way that people are able to live and use all the connected features. I mean, we're building a build to rent project that I think you know about, and we're building all of that in. So those residents will have a doorbell and a thermostat and a front door lock and a garage door opener. It's all going to be on one single app, and we can create and provide that user experience for them. It also creates a lot of management benefits for us, because now when a winter freeze comes, which we've had one event each of the last 3 or 4 years, we can raise up all the temperatures so we can keep our pipes from freezing, and we could manage things like that don't have to go change the key locks every time. So there are operational benefits from a technology standpoint. You also look at like leasing, and I think AI is definitely, there's a lot of AI tools right now that are helping set up leasing. And you go on a website or you call the apartment and you're talking to an AI that's helping you answer questions, set up appointments. We've had a lot of leasing folks that are saying, "Oh man, whatever the name of the product is, she's amazing." And I walked in, I had 8 tours scheduled for today that, man, a human didn't have to interact with that at all. It's great for us, lowers payroll, makes them very efficient because, hey, my time in the office, like the sort of pre-vetting work's already been done. So I think there's a lot of elements where it will impact, operationally helping us lease. There's an AI for work orders now, and kind of eliminate some of the easy troubleshooting things that, if you got a disposal that's, hey, have you pressed the reset button? Like that doesn't need to be a work order that somebody's got to come check on. So I think on a host of those factors, it will impact things kind of just in a routine business, but I don't think it is going to disrupt have an industry go away. Like you've seen it attack so many industries and businesses where like, oh my gosh, we no longer need this, taxi drivers, technology, Uber totally disrupted that. They're not necessary anymore. That's not going to be the case for residential housing. You're always going to need a place to live.
Absolutely. Well, great examples. Great examples. Yeah, I have a family member who is a lawyer, has a successful law firm in the Northeast, and we were talking about this a few months back, and he was saying that it was a little nervous because a lot of the legal stuff is research, and that's their bread and butter. But then they did have, for better or worse, there was a big case where a firm came up and they used AI to generate some kind of brief, and it had a huge mistake. It was small, but it was a huge mistake, and it became a big deal. And he was like, "Oh, that'll probably set back AI, 5 to 10 years. So I'm good for now," in terms of people like over relying on it, right?
Sure.
Well, we had those challenges in the military. We did a lot of automatic target queuing and target recognition, and we used to go over that for a couple decades. I worked with technology, and that was always the thing. Is like, okay, we want it to be assisted, but at some point, you certainly don't want the robots pushing the buttons for kinetic operations, right? Or telling somebody where to go and what to do. But these other tasks you're talking about, like prop tech areas, the management, the smart systems, those are great examples you give. And I'll look forward to offline talking to you about some of the ones that you've implemented. The 8 leases there, that's amazing. I've just named my first AI assistant last week. I was working with a company. They told me I had to name an AI assistant. So I was like, well, call him Froggy. That's my brand, Froggy. And they're like, no, it needs to be this. Some people use celebrities or whatever. So I spent like 10 minutes naming my AI assistant, which I think her name is like Olive Rockefeller or something. It was like, it meant to convey something nice on one end, meant to convey money and power on the other side or something.
Yeah.
So I'm glad your AI assistant's lining up leases for you.
Yeah.
So now I want to go back to your deal making. I need a warning for listeners on something that's gone wrong in your business and that you've learned from, and then you've done something to make sure you don't make the same mistake again. It could be a bad deal or something like that.
Yeah. I mean, look, I think luckily and thankfully, knock on wood, we haven't had any, really bad deals or where we've missed or whiffed on underwriting. I think we're certainly not immune to the interest rate environment and, what's been happening, and the market's much softer today than it was, 2.5 years ago, 3 years ago, particularly in Austin. I mean, we had kind of consecutive years come out of COVID where we had 15% rent growth and then followed up by like 22% rent growth, consecutive and compounding like that. Everything looked good and was easy then. Now it's because of all that rent growth, you had a bunch of supply. People look at the population growth metrics and, we've got a lot of stuff delivering. And so operationally we're pretty flat. And you look at kind of the next 12 to 18 months is going to be a bit of a slog, in that supply's got to work through the system and interest rates are higher. And so, developers' cost of capital, our cost of capital, it's all much higher than it was, and rent growth has tapered off. So, not to say we don't have deals that are, not doing as well as we'd want them to, but when we haven't done any bad deals, I think the joke has been, hey, if you had to do it all over again, we were coming back from a property tour this morning with Hayden, who runs our acquisitions, and was saying, well, it's like the next time cap rates get to be a 3, we're selling everything. And I don't care what the prepayment penalties are. Like you you sell everything and you start over. So that'd be sort of the one comment lesson you'd say, a joke of, if you go back and do it again, you recognize kind of when you're at a peak and probably sell a little bit more or a little bit earlier than you thought, even if it's super early in a business plan. But, some of the things we've always tried to value in the way that we've approached our business. And I think it's helped us navigate some of the times now. And again, it comes back to just being simple in the way you think about real estate deals, but we've never wanted to be over leveraged. So we have like a very firm and hard rule that we won't take more than 70% leverage. Our average leverage is like 60 going in is like 65 or 64%. And routinely, particularly in like, peak 2021, 2022, lenders saying, hey, we'll give you 85% leverage. You can get more dollars. And we said, no, we're not taking more than that. That has served us well. We didn't take all fixed rate loans, which I wish we would have. So we've had some adjustable rate loans, and the cost of a rate cap is 20x what it was and what you thought it would be. And so there's certainly lessons to be learned and taken from that, and how you think about protecting yourself and sticking to some of the fundamentals. But look, I mean, that's not something that was unique to us, and kind of everybody that was doing deals had kind of migrated to floating rate bridge debt, because that's sort of where it made sense. And so you take lessons away from everything.
It must have been that UT education to make you guys do this much. So sell if you ever get to a 3 cap again, which you probably won't ever get there again, but sell. Try to recognize when it's low. Say it's down to 4 again. Sell. Don't over leverage. Maybe pick and choose variable interest rate loans. Maybe go fixed more next time if you feel like you're in between there, and you want to hedge your bets with a fixed rate, so you don't have something that could blow up. But nothing. It sounds like you haven't had enough bad experiences yet, and you already had $850 million under management. No other horror story, no other lesson you can come up with. If not, I'll move on to the next question.
No, I mean, again, thankfully, look, we've never lost people's money. We haven't had deals go back to the bank. We haven't had, so knock on wood. We're not perfect, but again, local. I mean, we're working our butt off right now to preserve value, and in a lot of cases, we probably won't make a nickel on some of these deals, but we're going to do everything we can to make sure our investors do. And that's important to us, and it's part of who we are. But I think we've been helped by some of those fundamentals. But no, it's not. We're not perfect, and it's not perfect, but we haven't.
Got it. Did you ever have to fire a contractor?
Contractors, yes. Property managers, yes. We've changed management. I mean, look, for sure you face challenges in day to day. I mean, again, multifamily is a hand-to-hand combat sport. The turnover, getting to know your managers, losing your managers, your maintenance staff, having to fire a management company, having to swap out a contractor. I mean, we deal with all that. You get, unfortunate situations, people passing away in your apartment. Like it's not all sunshine and rainbows. You're in the operating business.
That's the only soundbite I needed. That's the only soundbite I needed then. So I want to make sure everybody watching knows these guys at Wildhorn, they do some hard crap every day too. It's just you guys persevere through it. It's just part of the business. You've accepted it. So,
Sean's at one of our assets right now. We had, plumbing backup popped up yesterday. So we're over there seeing what do we need to do? How bad is it going to be? What's the remedy? So it's every day. I mean, it's how tenants, toilets, and what's the third T? But it's
taxes, maybe. I don't know. Tenants, toilets. No,
every day there's something. The operating business is not easy.
But it sounds like you guys plan for it pretty well. You have margin in there for contingency. You make sure first and foremost your investors are protected, and then if you do really well, you'll make money too. That wasn't so horrible, but now I want to get really positive and see if you can pick either a deal or a method that's just made you out of your mind because it went so well, and it went way better than expected, and it's going to psych up some of my 13 listeners so far to just say, wow, this is like amazing.
I mean, the easy answer, it's the flip side of what we were just talking about, is like, you looked really smart if you bought something in 2019 at a 4.5 cap and you sold it at a 3.25 cap, which we did. Like, hey, those are huge home runs, and you celebrate those, and you tell your investors they made a 39 IRR, and we told you to be 5 years. It turned out to be 2.5 years. But again, if you were in this space, everybody has those wins and those stories, and I'm going to claim credit and celebrate them. But that was a market driven phenomenon. I mean, we executed our business plan and we did what we thought we said we would, but we also benefited a lot from market dynamics and low interest rates and cap rates that were compressing. I think on any specific deal, finding creative ways to add value and not being afraid to try new things is probably what I enjoy doing the most, and I think about the most, and where we are different and hands-on, whether that's reinventing and thinking through the way we want to go bonus our managers. Because, hey, what I know is when you have a happy and engaged manager on site, your property performs well. They've got a team that's all bought in on both the leasing and the maintenance side. And you can see two assets and here's the financials of one and here's the other. And you can tell when you've got a really good manager in place. So how do we rethink how they are compensated and be able to share in some of the upside? Or, hey, if you outperform, like, I want to pay you a lot. I don't want you ever to leave. I want you to be a part of the Wildhorn team and family, even if it's at a different asset. So I love doing that stuff. And we had some really good success stories where we've seen somebody grow from a leasing person to an assistant manager to move them to another asset. And they've had a ton of success and have grown. And there's a personal aspect to it that's gratifying and fun to see. So things like that I enjoy.
Well, thanks for bringing that up then. Not exactly where I usually head with that question, but you just brought up a very valuable point in terms of the people that work for you in property management. I've been lucky and unlucky enough to watch my wife manage the properties here in our town. And very early on, my ideas of managing an empire went away immediately. I'd be a terrible property manager. I don't want anything to do with it. I have problems being assertive in certain situations. I'm either passive or aggressive. And it doesn't work when you're dealing with, meth heads that you got to kick out, or like somebody lied to you about this or something. So you have all these situations that I've seen her deal with. And I say, wow, I got a ton of respect. But to your point, and a good lesson for people thinking about getting into, is that whether you're the landlord or the property manager, this is not a passive business. Like, for you have people that can passively invest. It's not passive by any means. And too often, I think people just think about the property management aspect, and sometimes construction management as well, like, which are two of the vital areas for things to go right or wrong, construction management, property management, as just like easy commodities to just like stamp out, like you're just going to go buy them. No, these are people, and people that are motivated just like you are to do good jobs. Some of them do good jobs, some of them not as much. And thinking of ways to incentivize people to align interests is crucial. So I'm glad you brought that up. That's amazing.
Yeah. And it's a really hard business. I think the on-site management, and we've spent a lot of time talking and thinking about it. If you look at some of the stuff we were talking about earlier, everybody wants to work from home and have flexibility and different schedules. Like, this is a business that doesn't really allow for that. If you're on site, you kind of have to be at the property, and we can have an awesome AI chatbot that's helping lease units. That property manager, those maintenance folks, they have to be on site. It's not a, hey, one day a week you can work from home. Like, you got to be there. That's hard. I think the relationship with the residents and the tenants has shifted a lot too. The expectation, even on a brand new Class A deal, their expectation is it better be perfect. And if something's not perfect, I'm going to let you know about it. And there's almost a sense of an entitlement sometimes, like, you've got 30 minutes to fix this, or I'm going to blast you with a 1-star review. And so you're dealing with a lot of different dynamics. It's really hard. And they are so finding somebody who really has that temperament that can, take a lot of bullets from ownership, like, why the heck is this happening? And from residents who are, constantly in there, talking to them, complaining, whatever, my neighbor's giving me grief, somebody's not picking up after their dog, whatever it is. Like, it takes a special, unique person who wants to be that, or say, forget this, I could go do something else and have some of that remote flexibility and make the same amount of money or more money, or, whatever it is. So it's 100% a people business, and very operationally intensive relative to an office building, where you hear from your people. You sign a lease for 5 years and you might hear from them twice a year, maybe, you know?
Yeah, absolutely. Absolutely. You got to be in there. That person has to have that mentality that they're fine with mixing it up. They're good. They're good with people. And the right type of person is definitely a person that enjoys that. They're doing it for other reasons too. It's not just the money. They know they're good at it, and they kind of operate well in that space, which I'm
Yep.
terrible at. Although I did help, like I said, the meth head stories. Like, okay, my wife's like, okay, the sheriff's going to be here today. You're going to change the locks. This crazy lady with her kids are going to be moving out at the same exact time. Just don't talk to anybody. I'm changing the locks. The cleaning lady puts everything in the middle of the floor, even though this eviction had to happen. I use one example. Like, my wife would still be like, okay, I'll give them another 48 hours to get their stuff out. I'm trying to, understand this weird situation. And then, crazy people call us at like 2 a.m. and say, oh yeah, my brother-in-law is here with the truck and we're ready to move out of this 2 family. I'm over there in the snow and hail, like putting couches on the back of a truck in the middle of the night. Like, how did we get here? What happened here? That's supposed to be like some
Yeah.
passive empire going on, but you get these situations. Yeah, it's crazy.
Yeah.
Last thing, and I'll let you go. We both got something to get to in a little bit, but now I want to talk about financing and funding. You've learned a lot and done a lot in this space, and I'm wondering what you might be doing these days to deal with the challenges going on, either on the equity side or the debt side. And if you don't have something recent on your mind about financing and what you're doing, then maybe you have some other great lesson learned where you've creatively financed something or succeeded.
Yeah. Well, look, one of the great things about real estate is you can put leverage on an asset. And so you can go, find a lender in debt that takes your return farther. And, you don't have to have 100% cash to go buy a $80 million property, for example. But I think you do have to be really thoughtful about what your business plan and strategy is for the asset, and then kind of aligning your capital stack in a way that aligns to that. I think when we made the decision a couple of years ago to really double down and say, hey, we're Central Texas folks. This is what we know. This is where we have conviction. We're not going to go into other markets. What we do want is the ability to do different types of deals within Central Texas. So amongst our portfolio, we have 80s value add properties. There might be a covered land play that we're re-entitling it, but that's a 3 to 5 year business plan where we might have a shorter term, loan on that structure, and maybe that's a 70% leverage deal. Well, we also have brand new property that was built in 2021 that is meant to clearly not a value add. It's just we love the location. It's got barriers to supply. That's a 10-year plus investment with a capital partner, whether we've got one with a single family, one with a sort of longer term fund. That business plan is very different than this 80s business plan. And so getting your debt structure lower leveraged, fixed rate for long term, that works on a long term play. It doesn't work if you're trying to do a shorter term investment. So I think thinking through your business plan and aligning your debt there, but then also just knowing and understanding and being truthful, I think, about what your investment thesis on an asset is from an equity standpoint. When you're looking at talking to equity investors, hey, here's what this business plan is. And all of our deals don't have the same structure. They don't have the same, it's not just a rinse and repeat. A 10-year deal, that's more of a cash flow play, a wealth preservation play, a depreciation and tax play. I'm not targeting I'm not going to get a huge IRR in 10 years because I'm investing here for different reasons. I believe in all those reasons and I know why we're doing it and know why our investors are doing that. That looks and feels different than, hey, I'm trying to go create wealth and hit a triple in 4 years on this value add. I'm trying to create a ton of value. That's a different mentality. Hey, there's no cash flow on this deal. We're trying to go hit a big lick in a few years versus this is a slow and steady cash flow deal. So you got to understand in the differences in who your investor is and kind of what are people interested in. Our build to rent deal, I mentioned it as a sort of somewhere in between. There's a development component There's a refinance component. You get some of your cash back. And then there's a period of time where that you're going to get really healthy cash flow returns before we eventually will exit. So I don't know we're doing anything necessarily creative or unique there, except we're not married and wedded to any one specific structure. Back to me loving the deal and creating the deal. Like we would use the word conviction a ton. If I've got conviction about an asset, about a deal, about a business plan, can we go execute it? What's the structure that works for that deal? We operate a really lean team. We have 6 people on purpose so we can be creative. And like, I want to be able to go execute interesting deals and not us have such a big overhead or payroll load or whatever that it's got to be this or we can't do the deals. Like I can fit into almost anything if we want to, and if you want to, and if we find a mutually beneficial partnership. And it's like, hey, that we both agree about this business plan, this structure, this deal, let's go. And that's where the creative part comes in, and the part that I frankly just really enjoy. So we're not doing anything super special or creative other than being able to change what we're doing on a deal by deal basis.
Well, that in and of itself is first of all, it's a great answer. Second of all, it's both honest and it's an approach-based thing. Just from listening to you, because I don't really know you other than a few conversations we had before, but from listening to you, I perceived that approach of each deal's unique. Reminds me of like what makes Bill Belichick. One of the things made Bill Belichick, and I'm a New England Patriots fan now because I've been in New England since 98, right? After miserable years as a Browns fan, because I'm originally from Cleveland. But he game planned every week. Like he said on an interview once, we're all just doing different variations of what Paul Brown came up with at some point. But in terms of your deals, the fact that you're taking each one and saying, we're going to game plan this one specifically, that in of itself is unique. And a lot of people don't think that. People do try to put square pegs in round holes. They do it all the time at really big deals too. Yeah. And a lot of people don't understand that nuance. So I do love that approach. Nimble, small team. I love that as well. That's a great lesson in and of itself. And setting up the financing. And because you guys are specialized in Central Texas, which I think was probably a burden off your mind in terms of if you ever thought, we're going to expand here and there. Probably great that you're not planning on doing that beyond your area. Texas is big enough to be its own country, as we all know.
Yeah.
And your area, I'm guessing that you've got all these lender relationships now too. So you probably have a stable of people. You don't have to go far. You don't have to go looking, I'm thinking in New York City or Chicago or San Francisco for money, right? Or am I wrong? Have you had to reach?
No, we do. We got lenders that are in partners in all 3 of those markets actually. But I think what it allows us to do is we're the local operator, and we want to be a resource. So if you're our lender who's based in Chicago and you're looking at a deal from somebody else and you want an opinion, call me. I'm going to tell you what we think. Well, why I like that area, why the northeast corner is where you want to be and not the southwest corner. We'll tell you what we think of the asset, what we know about who the developer was or is or whatever. So I think being a local resource to a lender about our specific deal, but about our market in general, same thing for equity partners. Hey, we're here. It's our job to know this market better than anybody else, to have all the data, to see all the deals, to know who's coming to town. You're sitting you're in New England. You shouldn't be the mark at the poker table. Come down, invest with us. We should know it better than you. If you can do it as good as we can, we shouldn't be in business. Like we're here every day and we know it. I shouldn't be able to come into your backyard and win, right? Like it's a little bit of square peg and round hole, but that's kind of how we operate.
You threw me off again with an amazing answer because a Boston guy. So these lenders are smart everywhere. So a Boston lender would say, hey, Andrew and Wildhorn, these guys know Austin. So I'll give you a better loan deal. Yeah, because you know Austin. So in my mind, when I asked you that first, I just pictured that there's so much money in Texas and in Austin now, especially it's becoming tech capital of the world again. For the middle of the country, that I would expect all the local lenders to outcompete against the guys from outside. But apparently not necessarily so. And you probably want to diversify anyway and have different options, right? So,
yeah.
All right, great. Well, hey, thanks, Andrew. It's been a joy having you. And how do people get in touch with you guys? What's the best way for them to track and invest and do things with Wildhorn?
Wildhorn Capital, the company name, our website is wildhorncap.com. You can go on there and reach out. Would love to connect, keep up with us, what we're doing there. That's generally the easiest way.
Hey, thanks for having me on. If anybody else wants to find out more about what we're doing, please come to froggycompanies.com. Check out our 3 different business areas. We also have the Froggy Fund 1 that's now open for up to $18 million. We're going to be investing that $18 million across a diverse number of assets, cash flowing and ground up. And I'm really excited about this fund and really confident that we can outperform most of the other people out there in terms of what we invest in and how we do our due diligence and the type of partners we put together. So it's great talking to you, and see you next time.